Hi guys, in this video, I'd like to discuss the recent performance of Adobe. As you see, on an all-time basis, the stock has been performing exceptionally well. But if we zoom over the last 5 years, well, it's less convincing to say the least. Since the top of February 2024, 2 years ago now, the shares are losing a massive 47%. So let's go over the financial report and see if the drop is justified. First thing, we can see on the income statement that the company recorded $23.7 billion of revenues for 2025. This is mainly due to subscription. Overall, the revenue increased by 10.5%. These are good results, especially in a context of low cost of revenue, here on the table, which means Adobe generated over $21 billion of gross profit. And after expenses in research and development, sales, marketing, and GA, the company is left with a juicy $8.7 billion. And most importantly, what catches my attention is the very low interest expense you see here in comparison with the massive $8 billion above. This means the company has very low debt on the balance sheet. We'll check that in a second. After tax and everything, Adobe is left with a little more than $7 billion. This gives the company a 29.9% net profit margin. This is excellent. Only tech companies, financial services, and banks achieve this level of margin, generally speaking. And last thing, this $7 billion profits are increasing significantly compared to 2024. This is an increase of 28%, and what strikes me at this point is the profit per share of $16.7 here. If you put that in perspective with the current stock price of $333, this is a price earnings of 20. It's a reasonable valuation. It may indicate the stock was overpriced in the past because the shares plummeted by 47%, we said, but long ago, the profits of the company were less than what they are now, meaning the PE ratio was well above the current level. So now, let's dive into the balance sheet. First thing, the total asset reduced on a yearly basis. In 2025, we are about $730 million down. The amount of cash dropped by $2.2 billion, and some other items increased a little. But okay, the main driver was the cash section. The reason being they bought back shares. And they do it very aggressively indeed to boost the stock performance. Less shares on the market leads to bigger earnings on a per-share basis. What I don't like at this point is the goodwill figure. I mentioned this in my previous video. Goodwill is the price above the net asset value a company is willing to pay when acquiring another business. For instance, you're a car company like Ford and you want to acquire, say, Mercedes. It appears that Mercedes' asset value on its balance sheet is $20. I give you a random number just that you get my point. But in reality, Ford will probably pay more than that, $25 for example. You overpay intentionally because you know you're going to get more than just the Mercedes factories. You're getting brand recognition, you're getting patents, a client base, etc. A lot of things that are not reflected in a balance sheet. Therefore, Ford is willing to buy Mercedes for an extra $5 per share. This $5 are then recorded in Ford's goodwill. So when I see $12.8 billion in that section for Adobe, it makes me nervous. I want to know what's inside of it. What company did they buy? In fact, I went over the balance sheet of December 2021, and this is where I saw the goodwill figure increase. That year, the valuation of this stuff increased by $2 billion, roughly. The reason being Adobe bought Frame in October 2021, bringing $865 million of goodwill in addition to $1 billion of goodwill for the acquisition of Workfront. This is how you explain such a big number, $12 billion we said, in Adobe balance sheet. Unfortunately, if you want a full breakdown of the goodwill, you will have to dig into past reports to see what acquisition they made. But for us, value investors, it's crucial to pay attention to this number, especially if it represents a big portion of the total assets. Another thing to mention on the liabilities side, the debt increased by $2 billion. But fortunately, we had almost $5.5 billion in cash on the asset side, if you remember, meaning that overall speaking, the net debt is very low. And this is why we had low interest expenses in the income statement. Of course, Adobe has to pay interest on its debt, But in the meantime, they receive interest as well for the cash they hold in their bank account. What else to say? You can see the stockholder equity is $11.6 billion, and you remember we had about $7.13 billion in net profit. Profit belongs to shareholder, right? It means that the return on equity is 61%. In other words, Adobe is a cash-generating machine for its owners. And if the trend continues, given the excellent fundamentals of the companies, Adobe could be an interesting stock to buy in 2026. Hope you guys like my analysis. Don't forget to like and subscribe, and I'll get back for another video very soon. Bye, guys.